All right. Hey, everyone. Mark here. Just want to check real quick, do a sound check, make sure you guys can hear me. Want to welcome you all to another Greenbridge Investing market analysis. So in today's session, I'm going to be going over the main lesson, which is the Pinterest options trade that we had. Because often when you follow options traders or people that are pushing options stuff, they'll say stuff like 200% gain in 5 minutes. But the question is, what was the risk, right? And that's the main lesson that I want to go over here today. I know Andrew talked about it in the chat room, but it's a very important lesson because, yeah, we had a huge gain in something like this, but I want to talk about the mechanics behind this trade, number one. Number two, we'll be going over the regular markets as well, like Bitcoin, the major markets, and stocks that you'd like to see. So, or other markets. So if you have a market, like a Forex pair or whatever you'd like to see, please share it in the channel now. And by the time I get to that, I'll have the symbols and we can get right into them. Okay, so with that being said, this is for educational purposes only. For investment advice, please consult the licensed investment advisor. Now, before we get into Bitcoin and all that, like I said, we're going to talk about Pinterest. By the way, if you're new to Greenbridge Investing, please make sure to register or subscribe to this YouTube channel here so that every time I do one of these, you get a YouTube notification. And also like the video if you like the video. Other than that, make sure you check out our website, greenbridgeinvesting.com. We do have swing trade signals by text and email, portfolio analysis, and portfolio ideas, which are long-term trades, and analysis that we provide each day in our chat room. Okay, now, and hey, Ankit, how you doing? Nice to see you. Reese, good to see you. Reese is crazy. Reese, I mean, what is it, like 3 a.m. where you are? That's commitment right there. Okay, anyway, hey, pal, how you doing? All right, so let's get into Pinterest first. Now, here's the situation. First of all, so Andrew called Pinterest, but he called it as an options trade the other day. Now, what did he like about Pinterest? Well, the chart was pretty clear to see, right? We had a consolidation that was taking place here, right? This was the consolidation, as you guys know. Wow. Yeah, Reese is committed. So this is what we knew at the time, okay? This is what the chart looked like. Forget today's gap. This is what it looked like. Now, in this type of situation, so you have basically a pennant formation, okay? Or we can call this a descending wedge, whatever you want to call that. The thing is, these type of formations are often trend continuation patterns. So that was the premise behind the trade. Now the question is, and the lesson that we can learn, for one, why did Andrew, Reese is in Australia, why did Andrew choose an option? Why did he choose the options instead of buying the stock outright? You could have bought the stock, okay? And you would have had a nice benefit as well. But there was a particular reason why he chose the options. Number one, the options helped to limit the risk dramatically. So he bought the August 22 call option, all right? Which means we had time. We had till like, what, the third week of August, I believe. I think he bought the monthly one. He had time in this trade. So the trade had time. The premium was about $3.20, okay, for the long call. That means if Pinterest did not work out and the thing just, the NASDAQ sold off hard and this thing broke the support, we would have lost $3.20 per contract. Now, and the thing is, if Pinterest pulled back $15, let's say, okay, let's just say they had a really bad earnings report, whatever, okay, negative news. The most we could have lost was $3.20. Now, meanwhile, the reward potential is unlimited because we're long a call, okay, from the $22 strike price. So if price goes anywhere above, if price goes to $50, okay, we still benefit from that. That's the advantage to trading options. And that's also what lures a lot of people, because they say, oh, I can buy an option real cheap, and if it works out, I get a big return, right? That's where 200% comes from, because we risked $3.20 and the trade went to, I mean, the options premium after this gap was at like $10 or something like that, right? So that's a $7 gain, $7 and change gain, okay, in one day. So he immediately got out of the call option. Why? I mean, why not hold it? Why not hold it and try to make more money? We had time in this option. We had more time, right? Why did he get out? Because when you get a gain like this is a home run. These are where we were anticipating, you know, a $2 or $3 gain, not this. So when the market hands you a home run like this, which again is a random occurrence, we don't know it's going to do this. We don't know how their earnings is going to come out. We don't know that an analyst is going to come out and say, oh, this thing should be at $40. We don't know any of that. All we know is there was a structure in place, there was a setup, and we had a choice between buying the stock or, you know, options were available, chose the option because of the, you know, potential risk, and that limited our risk right off the bat. We didn't have to worry about using a stop. We didn't have to worry about using all that because it was all built into the option. And this is where options can pay off big when you get these home runs. Like you know, and Andrew put this in the chat room, they're rare. But the other key lesson to something like this, because everyone focuses on, oh, 200%. I want to make 200% too. I want to make 1,000% in a day. I want to learn options, right? The thing is, what did we risk? And this is what you have to be careful when people are pushing options profits. You have to ask, what did you risk? We only risked 1% of our portfolio to participate in this move. Okay, so yes, the trade itself was a 200% gain relative to what we paid, okay, and how much money was at risk for the trade itself, which was $320. But the portfolio is a $30,000 portfolio. So we only had basically, well, it was like 2.3% risk or something like that. Basically 3% risk. If we were wrong, we would have lost, we would have lost, I just mixed up the numbers. The risk was 1%. The gain on the portfolio was 2.3%. That's what I meant to say. I'm like thinking ahead of myself here. The gain on the portfolio. So yeah, 200% gain. Wow, I'm so impressed. But if I put in the headline, Pinterest options trade, 2.3% gain, no one would watch this video. Okay, because 2.3%, that sucks. I could do better than that in my sleep. Okay, but the thing is, we risked only 1% of our portfolio. We could be wrong 10 times in a row and only lose 10% of our portfolio, right? Now, a common mistake, and I emphasize, some of you may know this, but the reason why I reiterate this and I emphasize it is because this is a very common thing with options. People see these big percentage numbers, 200%, I made 50% in a day, and blah, 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 right? You see that, but people don't understand what's at risk. If you go and risk 10% of your account, okay, sure, you would have made, like Andrew put, you would have made $10,000 in this trade. But if you were wrong, okay, you'd be giving back, you would wipe out 10% of your account in a day. 10% is an enormous amount of risk, okay? If you're wrong 10 times in a row at 10%, you wipe out your entire account. And a lot of people make that mistake. So they go in big and they hope for the home run, which is rare. They don't get the home run, and they may make some money here and there, but when the thing gets hammered, you lose very large percentages of your account. That's one of the reasons why we're not a very big fan of long options. Long options are actually working against you, but there are occasions where the reward risk makes sense and the potential makes sense. And that's what the premise behind this idea was. We typically don't like to play long options. We typically play short options, okay? But if we had shorted a put in something like this, we probably would have made next to nothing, and we would not have been able to capitalize on such a nice move, okay? Again, the market delivers this move randomly. And when you get your home run, great. You take your money and you run. That's why you don't sit there and hold on to it, even though we have more time. This can give it back. Have you guys seen Kodak? Gave it right back, right? So that's why you take your money and you be happy. Now, Reese had mentioned, in the chat room there, Reese, I remember you just mentioned about the Forex trades that we had recently with the euro and the pound, and we were long, and we missed a huge portion of those trades. Okay, that we got out of the pound. I think what was our third target in the 128s? The thing went to 130, right? But are we upset that we left those 200 pips on the table? No, we had a nice win. That was a great win, and we didn't have to take an enormous amount of risk to capture that. That's it. Forex has got to be one of the most difficult markets, and not big fans of Forex, but there's opportunity there. We're just very selective. So when you get a huge run like this in Forex, hey, they're rare, okay? We're happy making our small wins consistently. That's what we're after, consistency, not home runs. When the market delivers a home run, you take it and you be happy, and that's it. And then you move on and you look for the next opportunity, and that's what we're doing. So I just wanted to point out a few of those lessons on Pinterest because, and the reason why I'm mentioning this is not to brag. I'm mentioning this because I want you to be more prepared the next time you see options advertising and people talking about, oh, I made 100% in 5 minutes. Okay, I want you to understand really what the mechanics are behind that. Also, we had a couple of requests for another options webinar, and I'm glad you guys requested that because I'm going to figure out something where it could be more hands-on instead of talking about theory and say, oh, this is a call, this is a put, and blah, 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 which puts everyone to sleep. We can really be more hands-on because I want you guys to be confident with placing options orders. It's really, once you understand the mechanics behind it, it's really not that difficult, okay? It's just really understanding how the moving parts, how they work, okay? So, yeah, you know what? But there's, Reese, I understand, and that sadness, that may be from you feel like you missed out, right? That's really the source of that sadness. Oh, I missed out. The euro went to whatever, and I missed the whole thing. Well, where'd we get out of the euro? 1409, and the thing went to like 18 or whatever, right? We missed a huge move on that. I have to look at the euro, but again, there's no such thing as fear of missing out. You know why? Because there are so many other opportunities that we just find something else. Don't worry about missing stuff, okay? These moves are rare. Never feel bad about missing a rare move. All right, so that's Pinterest. If you guys have any questions about this, please ask me, and I'll be happy to explain further. Now, let's get into our regular market, right? Starting here with Bitcoin. Now, let's see, BTC, USD, because we had a similar situation in Bitcoin. And I'm going to talk about other stocks too, like we're going to talk about JMIA, because that's another huge winner that we had. Now, let's get into Bitcoin though first. So Bitcoin, similar situation. Now look, Bitcoin is being relentless. Doesn't look like it really wants to pull back. Now, but here's what happens in this type of situation. People get complacent, they get confident, they say, well, it's just going to continue higher. Then maybe if you don't know any better, you read some news or someone writes an article about some kind of great thing, and oh, I don't want to miss the next move on Bitcoin. I'm going to buy it now. But people don't have any sense of risk, okay? This is not a location. I don't care how many buy signals we get here. This is not a location to be buying. We bought at 92.25, as all of you know. This was the place to be buying, even though it looked ugly at times, and people made fun of us, and people, not you, but people on other forums said stuff about, oh, you guys are, you're wrong, you're always long, you're always biased, blah, blah. Why would you have, what question I always get? Why would you always be long only? Why are you long only? The short side makes so much money. Really? Show me how the short side makes so much money after this move. Anyway, I'm just being funny. But the point is this. This is not a location to be long. Why? The location, you're going right into another resistance zone. And that is a very important thing to realize. In a resistance zone, there's a greater probability that selling activity will appear. Okay, now look, if we go back, that zone, I didn't just make up that zone. I didn't just draw a couple of lines and say, oh, that's resistance. That zone actually has historical selling dating back to like to July and August of a year ago. You could see it on the chart, okay? People sold up there. So you better believe people are probably going to sell again. They're going to try. Now, maybe they won't be as effective, and maybe price can just break right through. That's also a possibility. But the thing is, we don't know until the market provides evidence. We can't sit there and guess, oh yeah, it'll just go straight through. There's no way to know. The market needs to prove itself. So why would we take a chance if the probability favors a bearish reversal? Right? Why would we take that chance? There's no reason to take that risk. The reward risk does not make sense. So what we want to see is the retrace. Now, I've talked about this on Wednesday, and it's still the same. We want to see a retrace, and the next support at this point is 10,500, 10,400. That area, that old resistance, is now the inflection point that is on the radar. Will Bitcoin go there? I have no idea. Bitcoin has to provide that opportunity, okay? So either it does or it does not. If it does, we look for a setup, and we look for a way to measure our risk. If it finds support earlier, we'll measure it there. But the point is, Bitcoin needs to provide a better price, and it needs to provide a way for us to gauge risk that makes sense. Clearly, it's strong, okay? But there's no reason to take risk. What if Bitcoin has a dramatic pullback more than we expected? I'm saying 10.5. What if it pulls back into the middle of the range, back to 9,000? It can happen for whatever reason. So that's why you can't sit there and be complacent, or you can't sit there and go on fundamentals or news or, oh, you know, there's inflation. Bitcoin has to go up. There's been inflation this whole time, and Bitcoin was asleep for quite some time there. So those are the things you have to keep in mind. Do not be distracted by fundamentals. They will not help you with timing. Now, so that's that. By the way, if you like my video, again, please give me a like and make sure you subscribe to this channel here on YouTube. So whenever I do one of these, you do get a notification, an email notification from YouTube. Now, let's move on to the next thing here. I want to talk about gold, because gold is in a similar situation. XAU, USD. Okay, and make sure you guys put your stocks in the channel too, or markets, so that when I run through, I only have a couple of these to run through, and then we can get into yours. Now, gold, again, has been hesitant. And I had a question about gold recently about, you know, this bearish candle. Would that be a good pullback to buy into? And even though after the fact now, we could say, sure, you could have bought some and it would have been in your favor. Just like Bitcoin, this is a very, very high risk location. Gold can easily pull back 100 points for no reason. And you know what? You'll turn on the news. Why did gold pull back 100 points? Oh, profit taking. Investors felt like profit taking today, so it pulled back 100 points because we have no idea why it pulled back 100 points, right? It can do it. So I don't care what the fundamentals are. We wait for a pullback. We follow rules, okay? And the rules are what produce the results, not our thoughts, not our opinions. It's the rules and sticking to them. So our rules say wait for a pullback. Where can that pullback develop? Well, a good spot would be probably around this area here. Was that 1900, something like that? That would be like a minor inflection point, because a lot of times, you know, these things will pull back slightly, okay, and then maybe turn. We'll see. But a much more reliable pullback would be obviously a deeper one. Now, here's another thing to consider. When these things pull back, they don't pull back in a straight line usually. They pull back, they pop up a bit, they lure a bunch more longs in, and then you get another leg lower, okay? And it pushes all those longs out, and then that becomes the buying opportunity. We would love to see a pattern like that in gold. If gold were to produce that, we would be all about getting back in again. Okay, so just something to keep an eye. My point of showing gold is no matter how good it looks up here, no matter how much exciting news that you read about gold's going to 3,000 by tomorrow and all that other nonsense, do not be lured into the peak. Right now, what we're seeing is the herd mentality across the board. The worst time to get involved, all right? Because it's when greed and complacency are at their highest and people feel safe. They look at the chart, oh, this thing's strong. Oh, I'm going to buy it now. You don't want to buy it when it looks strong. You want to buy it when it looks bad. And that's when people are selling it. They're all getting out. And that's usually when the best opportunities are in terms of the risk you have to take. Okay? It's all about risk. So that's gold. Let me see how am I doing with questions here. Okay. Hey, pal, don't feel bad about JMIA. Let's see. If you get a chance, okay. All right, so that's gold. Let me take a look at let's take a look at Forex pair real quick. All right, we'll start. Let's take a look at the euro, because I know there's been a lot of talk about the euro, and again, we exited the euro. We were faked out. All right, we were faked out, and I'll show you exactly where. We were faked out right here. All right, right here on this bearish pin bar. I remember, you can watch the video. You can go back and watch the video, and I talk about it. I say if it takes out this low, we're getting out. We got out at 14.09. Now, we made money in that trade. We were long from a good price, and we made money, but we missed this entire, I mean, look at this leg. I can't even fit it on my chart unless I reduce the chart. Look at this. Okay, this thing ran from, what's the low here? 1370 to a high of 1900, basically. That's a huge move for something like this. And we didn't have any continuation patterns or any setups along the way, except for this inside bar right here. But we're not going to take an inside bar at such a level at this point. This is where a move like this, in my opinion, is best capitalized when you're day trading or very short-term trading, not swing trading. You know, if you're in a day trade or you're in like what they call a position day trade where you're only in it for the day, but you're trying to capture a broader move for the day, you know, then there's opportunity in situations like this. For a swing trade, the problem is the risk, okay? The risk is too high. If we bought it here, we'd have to hope that it goes higher. We're not in this to hope. We're in this to measure. Our rules tell us we need to be able to take trades that offer a good reward risk and that offer a high probability of a profitable outcome. Even though, yes, we went up this one time, how many times would this work if we took the same trade 100 times? That's the question you must ask yourself in these situations. But people don't care. When I say stuff like that, they say, oh yeah, screw you. No, the market went up this much this time, and hopefully it'll do it again, and that's it. They're not looking at the probability of how often these type of moves occur. You cannot be distracted by it. Anyway, we have an outside, this is actually not an outside bar yet, but this bearish candle is definitely not cool if you got long, if you just got long the euro. All right, by the way, we've been eyeing the dollar Canadian as a long to take the opposite side, basically shorting, buying the dollar Canadian or shorting the euro. It's basically the same trade. But I'd rather, you know, the dollar Canadian had a really nice structure. So we don't take Forex trades usually going into a Friday, but definitely a candidate for Monday. In fact, let me pull that up here. USD CAD, okay? Look at this. Dollar Canadian is a good candidate, and it's the idea behind this is to capitalize on a bounce in the US dollar. Look at this. Why do you guys think I like this? For those of you that follow me all the time, why do you guys think we like this trade? I'm going to let you guys answer this question. Why do we like this dollar Canadian? Even though the dollar has been generally weak, and this, I guess in theory, would be a counter trend trade. But if you look at this chart, it's not exactly counter trend, because obviously the Canadian has its own fundamentals, its own situation that helps to generate this chart. It's not all the US dollar. So dollar Canadian is on our radar for a long, a Forex trade for next week. Okay, why do you guys think? You can put the answer while I move on here. So that's the dollar Canadian. Let's take a look at one more market. I want to take a look at, let's see here. What's another one that we've been watching? Well, silver is the same thing as gold. Let's take a look at something like some of these altcoins, okay? Yeah, right, Reese. Pre-clear support structure from June highs. Well, yeah. So we have a double bottom, okay, in the dollar Canadian. We have a double bottom. Not only do we have a double bottom, which we like to see, but we have this series of hesitation or inside bars developing at a high probability location for a reversal, and we have the outside bar completed. Nice. So this is setting up for a nice long, okay? At least an attempt for this 37.15 area, okay? At least an attempt for that. We're not going to sit there and be ridiculously optimistic and say, oh, the dollar Canadian's going to run all the way up here. We're just looking at a proportional resistance, and we're happy with that, okay, if we can get that. So that's the plan. our plan is obviously we've been planning this for a couple of days now. And you see, we don't just jump in just because we have an idea. We wait for the market to prove certain things and we follow our rules. So this would be a great candidate from Monday. All right, so we'll see how that thing looks on Sunday night going into Monday. All right, so I wanted to take a look at, I think it's pretty much these markets, right? I got the main ones. I want to get into, let's get into some stocks here. Right, Oswald, well, you got the double bottom. There's really no higher low here yet, right? Based on this structure. The higher low would be this needs to pop and then give me a few more candles. This single inside bar is not a higher low relative to this structure, okay? If you look at it like a 4-hour chart, you'll see a higher low, but we're talking about relative to this whole structure here. Okay, good answers, you guys. So obviously you guys know what's going on. All right, so let's take a look at some stocks. I want to start with JMIA, and then I'm going to get into the stocks that you guys give me. Oh, DAX. DAX, what about DAX? Definitely, we'll take a look at that. Let me just jump into JMIA first. Let me talk about this, and then I'll put the DAX up because that's another major market. JMIA, we had this one long, right? And someone had put that they got out of this thing early. Pow, you got out of this thing early at $9 or whatever, and it's higher. So you feel bad. Hey, don't feel bad. The trade is green. Again, moves like this are rare. A very common problem when people see stuff like this is, especially if they held it longer and they made some nice money on this, they think that they know what they're doing. And they think like, oh yeah, but a bull market is, everyone makes money in a bull market, they say, right? Everyone knows what they're doing in a bull market. Don't worry about missing moves like this. This is the herd. This is pure herd mentality. This is people on their phone apps buying it because it just keeps showing results every day. These are the same people that get caught in it when it turns. This is a great stock, and sure, we'd love to get back into something like this or issue another trade, but not at these levels. It's got to pull back. It's got to give us structure, okay? So my point here, do not chase. Do not chase. Now, I said that back here, and you could have said, oh, you told me not to chase it, and I missed all this money. Again, probability of this occurrence. How often does this happen? It does not happen often. Right now, we're in an environment where there's a lot of froth, and we're seeing all kinds of crazy moves in all types of stocks. This is not common, okay? I went through very long periods where stocks like this, doing stuff like this, were only imaginary, all right? For a number of years where stocks were not moving like that. So what I'm saying is these are rare and they're temporary. Now, let's get into some of these other stocks here. Let's see what I got. So if you get a chance, the Dollar General, all right, DG. Let's take a look. And so I'm going to do these in order. So I'll get to the DAX. Jerka, I'll get to the DAX as I go through the order here. So DG, Dollar General. Let's take a look. I mean, obviously a strong stock, right? I see higher lows, higher highs, very nice. The thing is, it's starting to have a little problem up here. What are these highs? 195.82. Okay, up in here. This, by the way, is a failed high. Let's examine this here. So you have this consolidation. Tried to break out, right? So let's pull up. Let's highlight that. Tried to break out right here. Failed. That's not a good sign. Number one. That sucks in. That lures breakout traders. They all get caught, and now they have to start. They start banging it out all together. They all start getting out of this thing at the same time. So this is not a good place to be long, number one. Number two, if the general market pulls back, again, this may be affected. I don't know how this reacts to the broader market, but from what I can see here, it looks like it pretty much followed the broader recovery bounce, right? The broader market was bouncing here. And as the market went higher and higher, this thing kind of stopped, right? This thing is really not making progress, which leads me to believe it's relatively weak compared to some other much better looking stocks. So for something like this, if I were to do anything with it, I'd want to see improving structure. I don't like the structure. I'd like to see some sort of pullback to support, and I'd like to see some clear, decisive structure, like a failed low, a double bottom, something that says, okay, others are stepping in, and such a level to anticipate something like that would be here around this 184 level, 185, this old resistance, which should be your next inflection point, at least on the support side. So that's what that looks like. All right, so let's see what else we got. Reese, when do we start looking at the USD pairs? For example, USD EUR has been dramatically sold off. So, well, so Reese, now you're talking about USD EUR. We look at EUR USD. So the USD base pair for us, like I said, would be dollar Canadian, right? Like dollar Canadian or dollar franc. So like, let me pull up dollar franc here real quick. Similar situation. And as you can see, it's trying to recover too. So this is the dollar. This is the US dollar in action here. And this is a nice failed low. I was looking at this, to call this a swing trade as well. I was looking at this because I like the location, but the dollar Canadian makes a lot more sense. Okay. I'm not a big fan of either the dollar franc or dollar Canadian, but when you compare the two, dollar Canadian looks better. So now is the time to start looking because they're in a good location. And the probability of a bounce, at least an attempt, is high. So we're open to that, like I said, early next week. So those are the trades we'll be looking to put out. At least, we're not going to call both because it's the same trade. So it's either the dollar Canadian or the dollar franc, right? Because those are the two we pretty much look at. And we're most likely going to go with the dollar Canadian. All right, now, let's see here. Next one, DAX. Let's take a look at DAX. DAX DE30 EUR is the DAX CFD. Oh, and you know what? I forgot to go over the NASDAQ. How can I forget to go over the NASDAQ? I knew I missed something. All right, so this is an old DAX trade that we sent out as play of the week a number of weeks ago. Andrew called a more recent DAX trade, which has worked out very well. Now, let's see, the low is 12,206 at this point. Your question about the DAX is, what about DAX? Should we close? Well, so here's the answer. At this point, well, we have targets, right? So at this point, there's no reason to exit this. This is a bearish candle, and it closed weak. Okay, I don't see a pin bar. I don't see an inside bar. I don't see a doji. I don't see a failed low. I don't see anything. All I see is a bearish close. So considering, what's interesting to me is that this thing turned before the euro. Okay, the euro is starting to get weak now, but this thing is way ahead of it. So typically they follow each other, right? But this thing seems to be ahead of the euro. I would give this thing more of a chance. Let this thing, give it a chance. I would be more concerned about exiting the DAX, locking it in completely, if you get some sort of bullish reversal pattern. And I would anticipate something like that off of a low like over here, which is what this 950 area over here. Okay, or even slightly lower. What's this low? The 500 area, like over here. Those are your inflection points at this point. You're coming off of a failed high. Look at this failed high. So this thing has some room. All right, I would give it a little bit more of a chance based on this close. If you get an inside bar next week, that would probably be more of a prompt or more of a reason for concern and locking in profit. All right, if you don't want to hold it to its targets. So good question on the DAX. Great looking short. Okay, we tried to short that a couple of times, and this one's working now. Speaking of that, let me just take, before I get into the rest of your stocks here, let's take a quick look at the NASDAQ. NSX, USD. How can I forget that? Now, we talked about this thing in my webinar. We did the webinar about patterns, about how to trade chart patterns, right? And many of you guys were there. And, you know, if you're new to Greenbridge, you could check out that webinar. It's actually on this YouTube channel. You can watch the webinar on this channel if you look at the videos. We talked about this inflection point in the webinar. We said this thing can run to this area, and here it is. It went straight up there, right? Because we had all those good earnings yesterday, blah, blah, blah. Okay, I don't care. And here we are. Now, we had an area that we could anticipate selling price action. And what did we get today? Let's open up the chart and take a look. All right, this is indecision. This candle, sure, we can sit there and judge the candle. I don't care really too much about the configuration of the candle. What I care about is the fact that we got indecision. Why did we not close strong? Why did we not push these highs? Now, maybe tomorrow, maybe Monday we will, okay? But this indecision at this area is not a bullish sign. This is likely to be a lower high, but that will not be confirmed until we take out this low of 10.7, which, you know, we'll have to see next week. Now, if I'm wrong about this idea and we take out the high instead, then we will probably retest that 11K high again, or, you know, the low 11s and try to push. If we take out that low, that's going to be another sell signal, okay? Great opportunity to sell the CFD, to short the CFD, to sell calls on the Qs, the IWM, that kind of stuff, okay? So again, a trade idea often begins first with the plan, and that's what I'm talking about here. We don't react and take the, you know, by the way, we're still short. We still have a couple of these positions on, you know, that are short, but to even send another idea out, that's what we'd need to see. And it all starts with a premise, right? And that premise would be the lower high, which of course would be what? A head and shoulders formation if we get that. That formation will not be active though until we take out this low. But it's okay, we could be short earlier. That's how you, that type of aggressive short is they usually pay off well when they work, because you have so much room to sell off. There's a lot of potential in those type of trades. It's just the probability of them working is lower because we're counter trend. Does that make sense? So that's the NASDAQ. I wanted to mention that. By the way, the NASDAQ has been acting strong today compared to the S&P, right? The S&P was a little weaker, sort of. Let's take a look at this S&P. I was looking at a chart earlier. I guess it looked weaker earlier, but it's trying to recover. This is the spider, the S&P, and thing is, you have this consolidation here. All right, it's important to mention these things because these lead a lot of the stocks. These are a reflection of the entire market, and this little tight consolidation is that's bullish. So we do have some conflict here. We take out that high and we follow through. That'll bring the NASDAQ along with it. So just some things to keep in mind. Even though that NASDAQ could be at a turning point, this market may lower that probability of helping it, you know, of follow through. All right, so just wanted to put those in there. Now let me continue with my list here. NKLA and FFBC. So Nicola, that was one that NKLA. Andrew mentioned it, and also Michael had asked about it in the chat room yesterday, because Michael was observing this failed low situation. And yeah, we like this. This is definitely on our radar. For one, we like the potential in this stock. It's a little hesitant right now. I mean, what's the price? 29, the low of yesterday was 29 even. And today this thing is fooling around. What's today's low? 29.23. So although we're getting the formation and we're at a much better location, you're not buying the highs, right? You're buying a retrace, which is what we like. This is a typical wave 4. It just needs, what I would like to see, because this is just a little noisy here, what I would like to see is I'd like to see this lower high get taken out here of 34.09. So because, you know, today's Friday, we'll leave something like this alone, but this may be a good candidate for next week as a long, as a swing trade long. One thing we don't want to do is call too many longs and have like 30 positions on, and then the market pulls back, right? And then we're overexposed. So that's why we have to be very selective as to what we pick. So in this situation here, yes, we like the location. There is a potential setup. We like this formation. Today's candle isn't that great, but that's okay. We're just not going to do anything with this today. This is a long candidate for next week. Where can this thing run? Well, the first area, the first inflection point would be this gap, okay? I like to use the middle of the gap as a point of reference, and that's at like 45. So this thing has some room. This thing has room to run, like workhorse. That's why we like workhorse. And if this thing really starts to go, this thing could be a home run. This one, I don't know if they have options, but this one would be like another similar Pinterest type of situation where you can get some cheap option on it, and if it pops, you get a big return on the option. So that's another possibility. We'll see. But you know, so we'll have to see how that plays out. But I like definitely good location, good reward risk. It's just a little too early. If this thing gaps up on Monday, well, we'll work with it from then. Because if there's like a gap up and it's starting to move higher, we can always try to use a limit order to capitalize on any noise that usually occurs. You get these little mini pullbacks during the day. All right, pal. So let's take a look now at what is that? FFBC. FFBC. All right, let's take a look. First National. So I guess this is a bank. Right off the bat, I see range. And not only do I see range, now you're not coming from a strong structure for one, right? That's a little problematic right there. We have a high and followed by a lower high. So that structure is not exactly bullish, although it could be changing. This high here is 1629. That's your range high. And right now, you're in the middle of the range. I don't like this location when I see range-bound market. Now, depends on your time horizon on something like this. If you're interested in holding this for long term, then okay, fine, you take your small bite. But if you're interested in short term, it really helps to look for the low of the range. And right now, that reference point for the range low is here, which is, what is that? Basically around that $12 area between, what are these lows? 13, 17. Right, I'd say around $12. Now, some people will say, well, what about this low? This pushed a little lower. That's your failed low. But a lot of times the market will react to this low back here, okay? Because everyone starts jumping in early. As you can see how it behaved here. So I would like to see one of those levels before taking a risk on something like this. Better reward risk. There are so many other stocks out there that offer better potential and lower risk. So I would wait on something like this for that range low and then put it on the radar for a potential long, if that makes sense. Looking at as inverse head and shoulders, okay, I can see what you're talking about, right? Shoulder, head, shoulder, sure, I see that. That would not be activated until you take out this range high, of course. But so I see that, but I'm also seeing the range. So just keep in mind for something like this, see how it plays out. I just think it's a little early here. I think this can go either way. It could pop, but it can also go lower. It's like 50-50. So why not see if the market offers you a better deal? Also, if you really want to be part of it, if you really want to participate, the other alternative is to just take a small bite. Take, something small that if it pulls back, you won't feel any pain. 15 shares, 10 shares, whatever it is. And then when it gives you that second buy signal, then you could put on more shares that you normally would have put on anyway, and you would have had an average price. Okay? That's not the same as putting more on to something that's not working. People always say, oh, you're doubling something that's losing. No, not exactly, because this thing is no longer, this is not a bearish trend anymore. This range has pretty much proven that, although it could become one again if it breaks the supports. Averaging into something like this is a lower risk way to get involved. All right, so put that out there. Christian, hey, Christian, welcome. So let's see, ADA, oh, yeah, okay, against BTC. So this is, this used to be on everyone's radar, like everyone used to talk about this one. And interesting move, nice interesting move recently, right, from June. Wow, that's quite a move there, considering, how this thing was for a while. So you have the failed high here, all right, and this is why we tell people not to buy highs. This is why I always tell people, don't buy those highs because you can get a better price. Here's your better price. Now, right off the bat, I see a support here. Let's see if I can highlight that for you here. See a support right here at, what is this here? It's not, all right, so you're looking at fractions of a penny, okay? Fractions of a penny. This is like a penny altcoin, not even a sub-penny altcoin. So in situations like this, when they're very inexpensive like this, you can start fooling around with it here, taking your small bite, but this thing has some room. This thing has room to pull back. So although you may have a minor support here at this number, what is this number? 1205. I'm not going to say the zeros. There's a lot of zeros and then 1205. All right. Even though you have some support there, I would rather see this thing give you a better price. Now you do have some structure here, and you do have some candles, right? You do have the failed low. We can't argue with that. you don't, this candle isn't closed, but you're getting the bullish pin bar. So there is an argument for a long. It's just with this kind of coin, it's very speculative, and you may get caught in the noise as well. So for something like this, I would reduce the risk by taking a smaller amount. So if you normally buy $100 worth of a coin, you buy like $10 or $15, right? So if it pulls back more, you're not going to feel it that much, and then you wait for another buy signal. I like the most recent structure is definitely bullish, but if we count this in Elliott wave terms, 1, 2, 3, this is likely a wave 4, and wave 4s can be very difficult and they could be noisy. So the first buy signal a lot of times will fake out. So just something to keep in mind. But bullish structure, not bad. Just keep in mind it's highly speculative. Okay, I talk too much. Let's see what else we have here. Can you look at Aussie stock? I have been stuck in UCM on the ASX for a very large amount. Okay, Reese. Sure, let's get into that. I know I talk a lot and I repeat myself a lot, so just you guys have to stop me and say, hey, let's move on to this. All right, so do I have the right stock here? I don't know if it's UCM. I don't think I'm on the right. Am I on the right exchange? No. Let me do this. They probably have a different symbol. Let's see. USCOM. USCOM. Okay, limited on the ASX. Okay, there we go. That's the stock. All right, got it. So let's see. What do we have here? Wow. So Reese, did you get caught? Did you get caught in this vertical move by any chance? Is that where you got caught? Because right now, it's in a consolidation, and you're at the range low. That's what you're dealing with right now. Is this the place to bang it out? No, I wouldn't bang out of this thing because you're banging out near a potential bottom. Now, there's an old resistance back here. What is this price? At 17 cents. And that is acting as a support. So at least give it a chance. Okay? At least try to give this thing a chance to recover. It may take some time. Obviously, this thing's been ranging for months. And I understand these things are a pain. Reminds me of like the cannabis stocks. 40 cents. Okay. So where was that? Wow. So you're up in here somewhere near those highs, right? Okay. So one of these, in this situation, again, you're near a low. There's a couple of things you can do with something like this. This is where you have to be careful by putting on more. You don't really, if it's not really working and this thing breaks lower, you're not going to be happy. So I would say give it a chance to hold this range. If it clears the range, you get a decisive break of this range, meaning it closes below 17 cents and you get a big bearish candle, kind of like this, like we see here, but it's, breaking that low, then most likely the party's over. Okay, and you're probably better off taking the loss at that point and then moving on at that point. But until that happens, in this situation, try to give it a chance. And to even be a little bit more aggressive, even if you add a tiny amount, just something to maybe lower your average price a bit, because even if it breaks the support, okay, you're going to take a loss on that too. But what you don't want to do is add a large amount. Just try it. Maybe you could lower your average price a bit, or maybe what you could do is you can wait until it takes out like this high here, 22 cents. Let it do that before you add, because at least if you're reducing your average price a bit, you can at least maybe get to break even or something on something like that. Because right now there's no structure here. There's really nothing going on for this thing to be popping to 40 cents again. Although it can come out of nowhere, just something to keep in mind. The mistake you don't want to make is you don't want to keep putting on, you don't want to keep doubling and tripling your position only to watch that thing break lower. Okay, so yeah, and also another good idea too is if it pushes those range highs, not a bad place to reduce risk. Okay, you're going to be taking a loss, but at least you're not banging it out at the bottom. Okay, so also that's another thing to keep in mind. Try to reduce risk. Unless it blows through, then you try to hold that. Or maybe you try to buy some on the breakout, add some, lower your average target, and then try to reduce risk. In a situation like this, it's really all you can do. Mostly is try to reduce risk. All right, so that's what I'd say about that one. But at least you're not breaking that range yet, and that range has been around for a long time. It's not like this thing is in a trend anymore. All right, so just have to be patient with that one. Okay. Oh, cool. Well, yeah. See, glad we can help you and provide some perspective. Again, I'm doing this for educational purposes. I don't want to give you the wrong advice, or if you take a loss, I don't want you to be blaming me. Like, hey, man, you told me to do this. Just understand what you're dealing with. I think you do. I'm just saying that for other people that are listening. All right, so that's that. No problem. All right, so let's see what else we got here. Do I have any other stocks? We talked about ADA. We talked about all those other ones. Okay, I think I pretty much got everyone's questions here. Do I have any other questions about anything else? How long have I been talking? I've been talking a long time. I see people, wow, an hour. No wonder why everyone's leaving. They're like, I had enough of this guy. He talks too much. All right, yeah, so that's pretty much it. I mean, the stock market's going to be closing here in a couple of minutes. If you're new to Greenbridge, please make sure to subscribe to the channel here and like my video if you like it. Also, make sure you check out our website at greenbridgeinvesting.com, where we offer swing trade signals by text and by email, portfolio management ideas, which we went over a few times here. We went over a couple of things, and a lot of perspective and outlook for different markets that we follow in our chat room. Okay, cool. So, all right, guys, so I'm going to wrap this up. I want to thank you all for participating and answering and offering your questions and giving me an opportunity to answer them and provide some perspective for you. If you have any other questions, please feel free to ask in the chat room. Come to our chat room. We have a free chat room as well, by the way. I am working on I'm trying to transition into something a little bit more accessible to people. So we'll see what I can come up with on that. But anyway, come to our website, come to our free chat room, ask us questions. We're here to provide perspective and at least give you an idea, a better idea of what's going on. Okay, cool. Yeah, no, I appreciate you coming to Reese. That really means a lot to me. I mean, 4 a.m. over there, you're nuts on a Friday night. I'm usually not doing this at 4 a.m. on a Friday night. I'm usually doing other things. So anyway, thank you. I really appreciate it. And you stayed the whole video, the whole time. I don't know how you do it. Anyway, thank you. So enjoy your day, everyone. Enjoy your next couple of days. We'll be back on Monday looking for new opportunities. And remember, dollar Canadian is on the radar. And we have a couple of stocks too. I didn't get to go over Workhorse and whatever, but we have a couple other stocks. ADVM is another one. Just make sure these things are on your radar, okay? And ADVM is active, and so is Workhorse. But I'll go over those next time. All right, everyone. Enjoy the rest of your day, and I'll speak to you then. Thank you for watching.